Hey, and welcome back for more stock market news updates. Remember to go and press that like button and subscribe so you can stay informed. But with that being said, let's dive straight into today's stories. In a week that saw the financial markets oscillating with fervor, the confluence of factors ranging from banking sector concerns to booming credit card debt and corporate shifts has kept investors and analysts on their toes. The intricate dance of economic indicators and corporate decisions have provided both insights and challenges for those navigating the financial landscape. Stocks weathered a stormy week after credit rating agency Moody's issued a stark warning to the banking sector. The agency's move to downgrade 10 small and mid-sized banks sent ripples of concern throughout the market. The downgrade itself was prompted by a trifecta of stressors, due to things like high interest rates, a potential recession looming on the horizon, and the strains of a struggling commercial real estate market. But as the economy surges forward, American consumers appear to be embracing the mantra of spend now, worry later. And we see this in a recent study from the Federal Reserve Bank of New York, which revealed a striking uptick in credit card spending. Lately, Americans have charged record amounts to their credit cards in the last quarter, pushing credit card debt past the formidable milestone of $1 trillion for the very first time. This surge in credit card spending can be attributed to a potential blend of many different factors. And these factors would include escalating inflation, rising interest rates, robust consumer confidence, and the issuance of a staggering 24 million new credit cards in the preceding quarter alone. Naturally, as more credit cards were issued, credit card debt surged, and so did late payments, which was a disconcerting trend that raised eyebrows among market observers. The report by the Fed unveiled that 7.2% of credit card accounts were overdue by 30 days in quarter two, marking the highest level in over a decade. Delinquency rates also exhibited an uptick, reaching 3.18%, an increase from the preceding quarter, which is not good news. However, context is key, and according to the Federal Reserve, these numbers, while concerning, are inching back towards pre-pandemic levels. So despite the staggering $1 trillion worth of credit card debt, economists remain cautiously optimistic about the future of the economy. Moreover, the New York Fed research suggested that there is, quote, little evidence of widespread financial distress for consumers, end quote, offering a measured perspective on this situation. Amidst the financial commotion, the healthcare sector unveiled a groundbreaking discovery. Novo Nordisk, a pharmaceutical giant, revealed that its highly anticipated anti-obesity drug, Wegovy, was found to slash the risk of major cardiovascular events by an astounding 20%. This revelation, gleaned from a late-stage clinical trial, positions Wegovy not just as a weight loss tool, but as a potential game-changer in the realm of heart disease, a leading cause of mortality in the United States. Meanwhile, Beyond Meat, which is a pioneer in the plant-based food revolution, faced a challenging quarter with a 30% sales slump. Despite its efforts to compete with traditional beef by slashing prices for its plant-based products, the company grappled with skeptical consumers questioning the true health benefits of meat alternatives. This conundrum underscores the delicate balance that companies in the sustainable food space must strike to maintain both financial viability and consumer trust. In other news, Palantir Technologies, which is renowned for its prowess in data analytics and cutting-edge technologies such as artificial intelligence, recently embarked on a visionary partnership with Azul Energy. The partnership's central goal revolves around managing and optimizing the current 200,000 barrels of daily oil production with an ambitious vision to support the growth of Azul Energy to a remarkable 250,000 barrels per day. Palantir and Azul Energy's collaboration is underpinned by the development of state-of-the-art software that is set to revolutionize Azul Energy's upstream production, amplifying efficiency as well as safety. Azul Energy will use Palantir's Foundry platform to digitally transform its operations, a testament to Palantir's innovative prowess and the trust it commands within the energy sector. Meanwhile, Class A shares of Roblox faced a tumultuous week with a retreat of over 11% in pre-market trading. The online gaming platform's Q2 results showcased a sequential decline in bookings and average daily active users, causing market jitters among investors. Despite a 22% year-over-year increase in bookings compared to a 23% rise in the previous quarter, the average daily active users dipped to 65.5 million, lower than the 66.1 million recorded earlier. So it seems that the company is losing active users. We also saw Take-Two Interactive Software experience a surge of more than 4% ahead of the market opening, exemplifying its remarkable resilience and growth trajectory. This video game publisher reported a remarkable 20% jump in total net bookings for Q1 2024, which is very impressive. This achievement can be attributed to robust demand for Take-Two's marquee titles, including NBA 2K23 and Grand Theft Auto. Notably, the contributions from Take-Two's acquisition of Zynga, which was finalized earlier this year in May, further fortified its position in the ever-evolving gaming market. Another company that you should keep your eye on is The Trade Desk, which is expected to unveil its Q2 earnings per share of 26 cents on revenue totaling $454.97 million. These anticipated results follow a broader trend of resurgent advertising revenue mirroring a revival in the advertising industry. However, not all stories unfolded as positively. For instance, electric bus manufacturer Proterra faced a significant setback, with its stock plummeting by a staggering 88.3%. The cause of the share price crashing was due to the company's decision to file for Chapter 11 bankruptcy, attributing it to various market and macroeconomic headwinds, which has cast a shadow over its ability to scale efficiently. Proterra's anticipated announcement of a loss per share of 27 cents on revenue of $93.28 million highlights the challenges and complexities inherent in today's competitive business environment. In the fintech sector, we witnessed turbulence as Upstart Holdings faced the brunt of a tougher lending environment. The company's share price nosedived by 19% in pre-market trading after it delivered lower than expected projections for the current quarter. Upstart's third quarter revenue projection of $140 million fell short of the anticipated $155 million that they were supposed to bring in, while its projected adjusted earnings of $5 million were notably lower than the $9.6 million that analysts had estimated, or at least expected at minimum. The fintech's recent experience underscores the intricate balancing act required to navigate the evolving financial technology landscape. Over in the realm of ride-sharing services, Lyft has faced headwinds as its shares tumbled over 7% in pre-market trading. Despite narrowing its second quarter losses from $377.2 million down to only $114.3 million year over year, Lyft has struggled to match its competition, while Uber is growing their overall quarterly revenue at an impressive rate. These figures highlight the challenges Lyft faces in their competitive ride-sharing landscape, to where Uber, as well as Tesla eventually, will become and are major competitors. That's all the stock market news I have for today. So for more stock market news updates, go ahead and press that like button right now, comment your thoughts down below, and subscribe so you can stay informed. With that being said, I wish you happy investing.